Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions, any questions you might have about your subscription, and what are my favorite strategies to utilize. For those of you who are new, welcome. If this is your first live event, do me a favor, just type in first. Always want to welcome new subscribers. This is my brief bio as Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab. Started Tradespoon in 2011. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally. I've been managing and trading my own money over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics. Disclosures are very important. I'm going to go through some of my favorite strategies to take advantage in the current market volatility. So please read the disclosures, and you can always pause the screen here if you need more time to read the disclosures. All right, before we jump into a trading system, let's talk. Anyone new? Is anyone here for the first time? Dan? Dan is first. Mel? All right, so first let's talk about current market conditions. So let's look at the spiders. So I'm looking at the 1 hour chart. So if you're looking at the 1 hour chart and you go back to January, the all-time high is around 476, 480. February high is 456. We briefly broke through the February high at 461, and now pulled back to 444. So the short-term support, overhead resistance, is around 451, right? This is where the market tested in the beginning of April. This also been support on March 22nd, overhead resistance. So 451, I would say, is a major support. And that's where the gap occurred, right? We've retested the gap to the yesterday and today, unable to fill the gap and then pull back. So short-term market is trading, I would say, between 442, right, or 441. That's the kind of the main, maybe a longer-term support. 441, that was the beginning of the March, where bulls were not able to break through the 440, 442 support overhead resistance, and now that's a support. So if you're a short-term trader, I would look at the gap, right, 451. For the bulls to be in control, they have to trade above 4. We have to have a close. The close print has to be about 451. I think once the market is able to close above 451, then we can talk about retesting again the March highs, 461, and potentially retesting the January high around 470, 476. On the downside, I think again, this is kind of a classical. Right, you have ABC. Another pullback, rebound, and then is there a question, is there another ABC pattern, right? And how far it is. I think my core scenario is that this level will hold, right? This is a strong between 436 and 442, right? So I think this is a buy zone, right? This is where you want to consider buying. Can it pull back, another 10 points, another 2%? Absolutely. Any negative news? Well, today, looks like, it's market is trading neutral. But next week, going into the earnings season starts on Wednesday with the JP Morgan. Potentially, we can have another pullback potential, right? but most likely this would be a buy zone, and I think it's just a matter of time for the market to rebound. So the way I would trade, again, going into, now let's zoom out and switch to 1 hour chart. Well, first of all, let's look at the stock forecast toolbox. So the stock forecast toolbox for today, this is the model. How many of you have not used stock forecast toolbox? Has anyone not used stock forecast toolbox? Just say no. All right, okay, no. Okay, so we have some new here. So stock forecast toolbox is basically a model. It's a neural network model. It basically looks at it doesn't look at any news. It doesn't even look at any of the fundamental data. It purely learns on technical data, right? So it looks at the open, close, low, and high. And you feed the data, the input data into the model is, if you look at the 10-day forecast, is basically 1 day worth of data. So it goes back, it'll need somewhere between 200 to 400 data points, right, to make that prediction. And makes a prediction where the trend is. So right now, the model basically, based on the data in the past couple months, it sees that we are still in a slightly bullish uptrend. Slightly bullish uptrend. Support is 444. Overhead resistance is 453. If you zoom out to 6 months, if you zoom out to the model 6 months, it's an identical model, but each data point is 1 month's worth of data. So that's why when the model runs, it only gets updated on the 1st of every month, because incomplete data point, you should not run model on incomplete data point. So you need 1 month's worth of data. So if you zoom out to 1 month, it basically says 415 is your support, 460 is overhead resistance. These predictions will stay throughout the months of April, no matter what is going to happen next during earnings season or geopolitical risks. The data doesn't change. So it basically says, if we revisit 415 in the months of April, May, then consider it a buy opportunity. Once we reach 460, then this is overhead resistance, and potentially you should consider to go short. And you can see there's not a lot of momentum behind the bulls for the next 6 months. So trend has definitely changed. From longer term perspective, going into September, October of this month, bears are in control. Average price is 434, potentially retesting the recent lows, which is 415, and breaking them in the next 6 months. So that's what the model says. We do have a different model, seasonal chart. The idea is that in statistics or in financial engineering, you want to have different models. You don't want to have infinite number of models, but you want to maybe have 2 or 3 models, main models, develop independently with different inputs, different outputs, and kind of making predictions of what's going to happen in the period you're trying to analyze. So seasonal chart is trying to analyze next 20 to 50 days. And again, it's not trying to determine the range, it's just trying to determine the range, the direction, right? As a trader, you need to know the range, and I think Stock Forecast Toolbox is doing a great job in telling you what the range should be. And then it also tells you the trend. So this is a seasonal chart, shows you a trend, basically saying 4 of 4 predictions are higher, that going into end of April, going into end of May, the average price between the Sunday, then the model runs on Sunday, and till for the next 50 trading days, the average price should be higher than it was on Sunday. Right, and you can see from seasonality point of view, also April usually continues to trade higher. So both models basically showing that short-term, market is oversold. Short-term market is oversold. It's sitting on the 200-day moving average. We do have kind of a cross between, which is considered to be a bearish signal. And long-term, I do agree it's a bearish signal. But short-term, we're sitting on 200-day moving average. Maybe we'll retest 50-day moving average, and that's a strong support. right? So we're currently sitting either at 50% retracement from all-time high to all-time low, not all-time low, but recent this year low 409 and all-time high 479. We're sitting at exactly at the 50% retracement. Right, so this is a trader's market, very technical, not a lot of, this is very simple, just looking at the retracements and Fibonacci retracements. So very key support, right? 445, 441 would be 62% retracement from the March high to March low, right? Or February low. So key support around 441, 445. And you can see bears are losing momentum, right? Bears are losing momentum despite very negative news, both from escalation in Russia and Ukraine, with all the images and pictures of atrocities happening with Ukrainian civilians, additional escalation in the sanctions, potentially turning off, buying oil in Europe. That extremely hawkish, basically saying we're going to be very aggressively not only raising interest rates, but also reducing the balance sheet, right? And despite all of that, market, kind of shrugging off this news, and at this point we're actually trading, Spiders is trading higher than it was during the Fed announcement. So the support seems to hold. That means there's only two ways. So the way I would look at this, you basically, it's hard to do. A lot of people ask me, Vlad, what do you think is going to happen by end of today, or what is going to happen by end of Monday? Nobody knows, right? It can go higher, it can go lower. You trade in the trend and you trade in certain support and resistance levels, right? So if you zoom out, let's say for the next couple, going into the earnings season, right? If you ask me what do you think is going to happen by, by next Friday or 2 Fridays from now, then it's reasonable to assume there are two scenarios, right? We will revisit this level, right? This level will hold, maybe slightly break through this level and revisit 464 level, right? From this point on, this is maybe 20 points higher, right? So in the next 2 weeks, let's call it now, give us more time. When you make a trading decision, you should always give yourself more time, right? If you're trying to think that by, we're going to go up 20 points by next Friday, just instead of buying weekly options that expire next Friday, maybe go into May, right? Maybe, or either do, go out 2 weeks from now, or, do May, do June, give yourself more time. But which event is going to happen first? Plus 20 points, which is the A. Event A, probably 2 weeks from now. Or are we talking about next two? We'll call it next 2 to 3 weeks. Or not two, next 1 to 3 weeks. Or will it go down 20 points, right? When you're making a decision, you look at risk versus reward, right? If it's 50-50, then it's a 50-50 chance. If you think, 70%, A is going to happen, then, then you should be more bullish. So minus 20 points from 447, that would be 427, right? Somewhere in around, yeah. So it will be like 38% retracement, right? Or event B. Right, those are the two scenarios. Maybe it will try to fill the gap, and then some negative news happen, or earnings are worse than expected, or geopolitical escalation, and then event B. Right. So if you're trying to trade in the next couple weeks, or end of April, or even end of May, right, you should have an opinion whether it's A or B. Because if it's A, right, then your probably portfolio composition should be, for every 2 long positions, maybe you want to have 1 short position, right? If you think it's going to go to 428, maybe it's reverse. For every long position, you should have 2 short positions. I mean, and I doubt that market is going to spend too much time just trading at this range, 444. It's probably either another leg down or another leg up going into the earnings. So just type in A or B. If you think which event is going to happen, is the event A is going to happen in the next 1 to 3 weeks, or is the event B going to happen in the next 1 to 3 weeks? So let's try to go this. All right. So Marvin is put down A, Joseph A, Mark B, chat A. Anyone else? So thank you. Everybody who's in live trading room kind of been already conditioned by my answers. They know. What about if you're not in live trading room? What do you guys think? We do have a few new people. Anybody else? You can put like, I have no idea. I don't know. All right. So, okay. No, thank you. A. Perfect. So obviously, if you said A, market pull back about, give up maybe right 62, 30, 40% retracement from the high. Can it get to 50%? 435? Sure, right? Depends on the news. So if you say A, again, too long for one short, one, or if you said B, then I would have two short positions for one long. Why long and short? I think this is a trader's market, right? A lot of new investors, they don't have a concept of time, right? They don't, the idea is that like you can't really time the market, right? Or nobody knows what's going to happen in 2 to 3 weeks, right? If you're a long-term investor, right? You don't really have. You basically been, your opinion that in the past 14 years, since 2008, market always, goes up, so it's irrelevant. You just buy and pull back, right? Everywhere here, just every time market pulls back, you buy, right? And you hold. That's great if we are trading in the bull market, right? That strategy works really well in the bull market. You just, you don't think about stop losses, you just buy and you hold, right? So how many of you don't put stop losses, right? That's probably a better question. The next question is. Mark, yeah, it could drop to 436 and then rally, right? Nobody knows whether it's 444 or 436. I think it will hold, but again, a lot of it depends on I don't know what other, assuming there's no other news, negative news, then this will hold. If there's some negative news, then yes, potentially, we can get to 436. All right, Joseph, always use a stop loss. So anyone, just anyone that does not put, doesn't even think about, when you enter the trade, you don't think about stop loss. You just think about, either target gain or just buy and hold. Anyone? All right. Okay, so in reality, I think, majority of the new subscribers or majority of the new traders, don't think about, stop loss. An idea you buy and hold. So and it all depends on your view on the market, right? If you listen to the news or you subscribe to certain newsletters, I think right now the world is divided into camps, right? The world is divided that this is just a short-term pullback. We're still in the late stage bull market, and we're going to make new highs this year, right? We're going to make new highs this year, and at some point we will break through the 480, continue going higher, and maybe 500, somewhere between, I don't know, S&P or 500 to 540, right? Continuation. Right, then the point is, it doesn't really matter, if the market is going to stop at 444 or 428, or even if we revisit 412, as long as I think that by end of the year we're going to make new highs, right? So that's one camp of the people. The other camp is basically saying that we are trading in the bear market. This is just a very strong rally within the bear market. But by the end of the year, we will retest 409 and break 409, right? And we will end the year, I don't know, somewhere in this, somewhere in this neighborhood, either 428 or 400, right? So down year. So again, kind of the world is divided into camps. This is scenario number one. This is scenario number one, and then scenario number two. So we can go through this exercise too. How many of you think by the end of the year we will at least break at some? We will revisit 500, 540, right? And close higher. We'll positive gains this year. So positive gains means we have to close above 476. So we're gonna, finish year in positive, or we're gonna finish year negative, right? Scenario number one, or scenario number two, where we're actually gonna break 408 and trade, maybe revisit 380 level, right? So that's scenario two. So how many of you think one or two? One. All right, Joseph, one. Chat, Marvin, two. Okay. Anyone else? All right. Anyone who's not in the live trading room? Okay. So yeah. So my answer is, I think we're gonna revisit A, right, and maybe even break A. Short term, but long term, if we're zooming into the end of the year, I think two is going to happen, right? So if you said two, then you have to have, you have to think like an active trader, where you look at the current support and resistance levels and trend, right? If you're a long-term investor and you think two, and you're managing 401k and you're rebalancing, every quarter you should rebalance your 401k. You should still maybe, it's impossible, you can't really tell what's going to happen in a week or 2 or 4 weeks from now, let alone, 3 months from now. But then if you believe that two can happen, then you should still use, dollar cost average, right? You hear this a lot, dollar cost average, meaning that you need to have cash, right? You need to have cash. And if there is little room to the upside, if you think that, best case scenario, we're going to reach 464, 476, right? And we're already at 448, then it makes sense to maybe have 40% of your portfolio in cash, right? Or maybe 50% of your portfolio in cash. Just depends on how, aggressive you are and where you are in your trading career, right? So, and that was always my argument with my friends or someone who has a full-time job and just looks at the market once every month, once every quarter. My argument, you have to look at how much is there room to the upside and how much is there room to the downside. If there's little room to the upside, right, if maybe the best case scenario, we can go, I think 20 points, right, from 450, maybe we can get 20 points in S&P, right, by end of June. I think best case scenario, from 450, we're going to get to 470, right? That's 20 points. But the worst case scenario, I think, we can get to 3, not worse, but realistically, we can drop, 50 plus 20, 70 points, right? So it's then the argument is that whether you trade every week, every month, or every quarter, if there is only 20 points to the upside and 70 points to the downside, and you're not an active trader, you don't really have any opinion where the market is heading, short term or long term. But the risk versus reward basically saying that it's an argument to raise cash. I'm not saying be zero. I could be wrong, and the market can continue hit 500 or 520. But if last year your cash position was 30%, maybe this year your cash position should be 40%, right, or 50%. So I always look at best case scenario, worst case scenario, and does the risk versus reward warrants me to be more bearish or more bullish, right? So, and the other two things is psychology, right? Fear of missing out, right? The reason I always want to be long and short, and this is an active trader market, because by the end of the day, spiders could be up, it was already up, down 0.5%, up half. It could be up 1% or it could be down 1%. It all depends, on the news and what the perception of the earnings season is going to be. So for that reason, it's very important to be long and short the market at the same time. How can you be long and short the market at the same time? You could do dollar cost average, right? You can do pair trading, right? You can do pair trading. You can be short. Maybe you're short, the weakest stocks right now. One of the weakest sectors right now are, my short candidates would be, what is the most weakest? Home builders, right? Maybe you short home builders, right? They're very weak, right? But you long something that's, maybe you long whatever you think is going to outperform. I think QQQ is going to outperform right in the next couple of weeks, right? Or maybe you know, maybe what else is a strong sector? Energy, right? So maybe QQQ and energy is going to outperform, but the home builders and what else is weak? Even semiconductors. No, semiconductors are probably not the good, but let's do banks, right? Or I think banks, right? So you can either have one-to-one where you long and short the stock, right? You know, you short the weakest sectors and you long the strongest sectors. So you do pair trading, or you do in dollar cost average. You know, if you think spiders at 449, but you're not sure which event is going to happen first, then you just buy half of the position on spiders, right? And then you close the other half. So that would be the approach to trading. So the most important items, I would say cash. I think 30% of your portfolio should be in cash, and then portfolio drawdown. Portfolio drawdown again is an example of, you know, I would say 4 positions on average and no more than 2.5% of account value at risk. So if you have 4 positions multiplied by 2.5% of account value, then you know whether you set A or B, or whether you set 1 or 2, or you know, you're not sure, you know, which event is going to happen first. One thing that you are for sure 100% confident is that as long as you stick to your rule that no matter what you decided on your stop loss and no matter what you decided, you know, on the direction of the market, you never have more than 4 positions. And when you see one position lost 2.5% of your account value, then you would exit the trade. And then you know your portfolio drawdown is 10%. If your portfolio drawdown is more than 20%, then the idea is that it's very hard to make you know, informative decision, right? Because the trade can go against you, but the idea is, you know, we can go through that scenario, right? So let's say I'm bullish. Let's say I said we're going to reach 460, right? And I'm buying, right? And let's say, you know, so I said event A is going to happen first, right? And I'm going long. Let's say I'm wrong, and you know, the market retests basically January lows, right? 428, right? So let's say this event happened. So how can I determine the position size? Well, if I'm buying at 450 and it can drop to 430, right? That's minus 20 points. Right, so we're going through this future rehearsal exercise, right? So I'm long personally. I think it's going to continue going higher. So what should be the size of my position? Basically, 450 minus 430 is 20 points. On average, in Tradespoon, the account is $10,000, right? So that's account value. 2.5% rule that I don't want to ever to break is $250. $250, okay, I can buy 10 shares of spiders, right? I can buy 10 shares of spiders, right? So if I buy 10 shares of spiders right now, right, at $450, I'm investing $4,500. And if it drops to 428, that means 10 shares times 20 points, I'm going to be down $200. Did I break my rule? No. Am I wrong? No, I'm not wrong. It's just, you know, something happened in the market, or, you know, in the market pullback, right? So my theory didn't work. I move on to the next trade, right? And I have a choice. I can either close at 428, or if I still think that we are in the, you know, we can retest these levels, I was just wrong on time, and maybe it doesn't happen in the next 2 weeks, maybe it happens in the next 8 weeks, right, that this level will hold. Then I can decide, because I can buy 10 shares, right? I can buy 10 shares. I can buy 10 shares, or I can start using dollar cost average, and maybe I just buy 5 shares. I buy 5 shares, I spend 5 times 450 is, 2250, right? $2,200. And then if it does pull back to 436, 432, I'm going to buy another 5 shares, right? Because I want to predict my own behavior, right? Because at this point, the question is, what am I going to do, right? Well, I know if I'm down 2.5%, I will exit out, right? And you want to avoid situations, we've seen this over and over, right? When market reached 429, but it overshot to 420, right? A lot of, including myself, I basically said, you know what? I think October low will hold. There's no way in January we're going to break through the 428 level. So what happened? At 429, if I'm down 2.5%, right? If I'm down 2.5%, on my position, or I have 4 position and I'm down 10%, I have to follow my rules and I exit out, right? I exit, right? I sell, right? Especially as I see it going to all the way to 416, I start, following my rules. Or if I'm down more than 10%, I actually start panicking, only to find out that after it reached 420, it jumped to 456, right? And then same thing happened in February, right? I think 420 will hold. I'm 100% confident, but if I'm down 2.5% on my position, I exit out, right? Especially if I see it now drop into 408, and then I see another 7 to 10%. So the question is, how do you avoid situations where when you look at your stop loss, right, or you look at your worst case scenario, market undershoots, right? The pendulum swings to extreme. How do you still make informed decision and don't panic? Well, the only way you can do this if you don't break your rule. And what does your rule say? Well, it's very simple. It's 4 positions times 2.5% of account value, right? So the idea is, if market reaches, I don't think it's going to reach in April, but next time, market reaches 408, and I think it's just a matter of time. It could be, May, it could be June, it could be October, I don't know. But, I do have, let's say 70% confidence that we will reach this level. Well, guess what? When market reaches this level, 408, I want to be down ideally less than 10%, right? Because if I'm down less than 10%, probably what's going to happen is the same thing, right? Market is going to overshoot to 396, and then we're going to have a strong rally to 436, right? And then this pattern is going to continue happening, right? We're going to have a pattern of lower highs, lower lows, right? For the next maybe 12 months, this pattern will happen. But you don't want to be, every time the market drops, through these levels, you don't want to just capitulate, right? You still want to be long the market, you still want to be short the market, but you don't want to capitulate. But on the other hand, you should not, right? You should not try to catch the falling knife, and the only way to do this is, again, control your position size and number of positions, right? So anytime you look at what your support level, right? This is long-term trading, right? But short-term trading is the same thing. If you put your 4 position and you're doing weekly trader, and let's say you said, I'm going to exit all my position at 440, right? Let's say you say, I think 440 will hold. Then it's the same thing. You need to make sure that underneath this level, you're down less than your trading plan allows. And then you can make a decision. All of these lines in the sand where you have to make a decision, you have to be flexible, right? You have to switch from being a bull to being a bear, or vice versa, from being bear to being a bull. Then you just have to make a decision. I'm down 10%. Do I use dollar cost average and I add, right? Because that was a great strategy back here, and probably will be a good strategy back here. Do I add to my position because I'm down less than 10%? And I cannot really time the market, or do internals in the market change, and I should probably just take my losses, close my positions, and just wait for market to reach some kind of a support level. right? So to have that dialogue, you basically just follow this very simple rule: number of position and position size, and give yourself more time. If I think market will reach 464, do I buy weekly options that expire next Friday? I would not do that. Do I buy options that expire 2 weeks? Only if you're a very aggressive trader. I would go into maybe May, maybe June, right? As long as the market will reach 464, it doesn't really matter if it happens this Friday or next Friday or 4 Fridays from now. If you have a bullish strategy, created put spread, iron condor, or use dollar cost average, you just wait. You just wait for that event to happen, right? And you give yourself more time. So any questions? So far. Fed multiple 50 basis points high. Yes, Mark, thank you. Angelique, hello. VHT. No, I'm not sure what VHT is. If you can tell me what you mean by VHT. So how can we, in Tradespoon, how can we help you kind of navigate this volatility? We have a lead trading circle, right? This is probably, in a trader's market, you can look at the trader log. All right, let's look at the last 7 days. I basically trade I trade every day. Every day I trade. I try to trade during live trading room, but market moves. It can move 2% in a matter of few hours. So I would trade outside of the market, outside of the live trading room hours. So Elite Circle basically allows you to first participate live in the morning bell, in the closing bell, where I would explain every trade that I make. It gets recorded. You can see the recording. And then via SMS message, you can always see all of my trades. Whether I am hedging my, Apple position with a put spread, or I'm trying to close, XOP position, and so on and so forth. So you get real-time communication of messages, and you can always know what my view on the market and what I'm actually trading. So that's Elite Circle. As you can see, in the past 7 days, I'm doing more than 4 trades. So I do trade pretty actively. I try to stay, within, 4 positions, maybe 6 positions, but just reduce the size. And that's Elite Circle. We also have Robo Investor. Robo Investor is where I have 1 new trade idea a week, right? You get newsletter every 2 weeks. So every month there is 4 new positions, right? You can just have these 4 positions and you can trade along, or you can decide when to exit and exit on your own. But you have these 4 new stock positions, and you can use Robo Investor. Also, there is a video and SMS messages explains you every time I enter or exit the trade. You also have a premium portfolio, right? Premium portfolio where, this is where I, hedge I'm long and short Apple at the same time, where people ask me, Vlad, how can you be long and short Apple at the same time? Well, if you trade in options, or even if you trade stock, you want to be long and short Apple at the same time. Maybe if you think Apple will outperform, I don't know, Rivian, right? Or some, or some other, let's say, I don't know, software. What's the other software? Software, Adobe, right? So maybe you're long Apple, but you're short Adobe, right? But the idea is you want to be long and short the market or sector at the same time. If you have options, you can, you can buy call and you can buy put, right? So this is an example you get in the video explaining why I'm long and short, Apple at the same time. I'm going into June, giving myself more time, and there's a video explaining. So same idea, every week you have new trade ideas. So premium portfolio, live trading, Robo Investor, Lead Circle is where you can have access to my portfolio, right? Spread trader, shadow trader, this is just a subset of these portfolios. And this is how you can follow all of my trades, right? We also have newsletters where you can see every day my view on the market. There's a video blog and regular blog that I encourage you to view. I already went over stock forecast, toolbox, and seasonal chart, how to use them, and some of the examples. And then we have a pick services where you can just trade weekly, monthly, or active trader picks. All right, any questions? Faust, yes. So if you're part of the elite circle, you will get messages that are part of the earnings power trader. You're right. Yes. So there's no difference in terms of getting messages. The list is bigger. In earnings power trade, I publish the list of all the earnings that I think it makes sense to trade, but I don't trade all of them. So that's the difference. Any other questions? Any questions on any of the services? Active Trader, Weekly Trader, Stock Forecast Toolbox. All right, it's 10:14. Let me go. So Stock Forecast Toolbox, again, main features are, it's really good in predicting the trend, support and resistance levels, right? Obviously, if there are news, when the Fed comes out and says we're going to aggressively raise interest rates, or we're going to aggressively reduce our balance sheet, the model has to adjust to this new information. So as long as the market is trading within the trend, then this is the trend, right? We're still in bullish trend, and potentially market can continue going, is trading in this trend, and looking at the close prices, potentially reach 456, 455 level, right? You get a model grade A, basically saying how often the stock is trading within the range. If it's a liquid stock, if it's an IPO, if it's a volatile market stock, or even like Tesla, where it's not manipulated, but there are a lot of news, right? Elon Musk says A and the stock goes higher, Elon Musk says B and the stock goes lower. Model cannot predict when and what Elon Musk will say. So if this, those stocks, you just have to be careful. Does it mean that model is not good in predicting Tesla? Not necessarily, but the more there are random news, the less then there's more room for where the model will have to adjust to Elon Musk tweets or to, let's say, earnings, right? If there is earnings announcement, then those are limited. Ideally, you want to analyze stocks that are very liquid, that short-term news do not affect the stock, and it just trades in certain trend, like spiders, QQQ, Apple, Microsoft, Disney. They don't react, unless it's an earning news, they don't move, right, or some fundamental news. So that's the model grade. It shows you the trend, support and resistance level. Ideally for Tesla, well, let's just concentrate on spiders for now. But ideally for spiders, if it reaches 444, you probably want to consider going long, right? If by end of the day spiders will reach 453, we're at 450, probably not a lot more room to the upside. You want to go short, but the difference is 2%, right? Between 444 and 454, about 1.5% difference. So whether you're doing day trading or you're doing longer term trading, I still encourage you to consider buying at the support and considering shorting at the overhead resistance, or at least use, again, dollar cost average. If you think, we're heading to 460, at least maybe buy half of the position at spiders at 450, because if it does reach 444, then you can enter again. So that's Stock Forecast Toolbox. Mainly I use it for trend analysis and support and resistance, 10 days and 6 months. Talked about seasonal chart, right? Seasonality, April and May are usually very strong months for the year because earnings are usually better than expected, and it's spring and people are in a good mood, and so that gives you seasonality. It shows you what the current trends are and what the predicted trends are, right? It basically says that by April 20th, models things we're going to revisit 470 level. And you have our output of our model for predictions and the accuracy level. All right, so that's seasonal chart, Stock Forecast Toolbox. Active Trader, Weekly Trader. Active Trader is a different model, very sensitive to short-term price fluctuations. So if you want to know which stocks are in uptrend and outperforming, we have Costco, we have Archer Daniel Midland, and Pfizer, right? So defense sectors, right? Costco's, Walmart, commodities, agricultural products, consumer staples, Pfizer, drug companies, they're outperforming the market. So if you want to see which stocks are in short-term uptrend and will outperform the market, then that's active trader. And you also have strategy A and B. If you see market is down 2% or down 1%, then potentially, wait for predicted low. That's based on stock forecast Toolbox 93 and 24. Right, but if you see that today the stock pre-market it's not down, it might not reach that level. So then you would wait for, let's look at today. So 94.44, then maybe, as we're approaching close to 94, you would enter the trade, right? And more likely than not, it will not reach that level. So we give you specific entry and exit points for both long and short trade ideas. You can always trade options. If you want to substitute with options, you can do the same trade. We'll tell you what the option we would trade. Sorry. Which options to trade. We're using weekly options, deep in the money. Or you could, and same idea with weekly and monthly trader. You just would have to go out further out, longer. All right, any other questions on Tradespoon subscriptions, strategies we're utilizing, the trades? Let's review like last trade. Let's see, trader log. So we have specific example. What's the last trade we did? Apple. Let's do stock. Most people trade stock. So we'll do XOP, right? So same thing. So I bought at 136.08, right? So this is an example where I'm trading around this position. So I bought 136. I'm trying to close at 140. Let's look at XOP. Kind of again look at the process. This is trading around position. This is not a short-term trading. So I would look at 1 hour chart and again look at the support resistance, right? If I bought at 136, obviously the next level of support is around 132, right? So when I buy, in Robo Investor or Profit Accelerator, or I'm holding position, longer than a couple of days, weeks, potentially if I think energy is an uptrend longer, then I always look at, position size, right? In theory, I don't want to be down more than 2.5% at 132 because next level of support is 132. And if I'm really bullish on energy, potentially can reach 118, right? So personally, I want to be a buyer of XOP at 132, and I want to be a buyer, 130, 132, that's one level. And then if it breaks this level, it's 118. So in all of these levels, I want to be a buyer. So if I bought at 136 and it can drop to 116, that's 20 points. Again, maybe I just buy 10 shares, right? I spend $1,300, I buy 10 shares, and then, I can either buy 10 shares or I can break it down into increments, right? I can buy maybe 5 shares at 136, and maybe I'll buy another 3 shares at 128, and maybe another, 3 shares at 118, right? If I believe that XOP is going to be a longer term trading. If you basically say, well, Vlad, it's been a few weeks, if we break 129, then I'm out, it's the same idea, right? If your stop loss is at 130, right? If you basically say, well, it's been, for the past, a couple of weeks, right? This level has been held, and you think it's a strong level. Same idea. At 129.76, when you determine the position size, that's 10 points to the downside, right? Right? You basically say, you know what? I'm not a long-term trader. I can't wait that long, right? So you basically say, this looks like a strong support, right? Going back to basically end of March. So that's, if you buy at 136, then your down is 6 points, right? Not to exceed $250, you can buy maybe 40 shares. 40 shares would be $240. right? You spending $5,000. At this point, let's say market does do this, right? XOP does do this, only to continue rallying, right? Because you think we're a late stage bull market and now it will outperform. So it's the same idea. Then just buy 20 shares here, right? You buy 20 shares here, and you buy another 20 shares, when it reaches 130, right? And if it does break down and you're down, close to 2.5%, then you would exit out the trade, right? Because if it starts doing this, well, then there is a good chance it can reach this level. But that would be the approach from my perspective, to trading, right? We'll show you when I enter the trade. I will show you when I exit the trade. I will show you what tickers, what strategies I'm using. But the position size, this is something personal, right? Nobody can tell you whether you should buy 5 shares, 10 shares, 1 share, 1 contract, 2 contracts. It all depends on your journey as a trader, right? And how much money you're managing, what your risk tolerance level is, how you were raised, and all. So that is more difficult. So in the beginning, if you want to venture into options, always trade 1 contract. Try not to buy stocks or ETFs above, $100, $200, because you're going to be over leveraged. If you're buying stocks, again, look at the wider range where the stock can trade. Just buy less shares, so you can get into this rhythm of making sure that no matter what happens in the market, you're down less than 10%. All right. Okay, perfect. That's all I have for today. Thank you very much. Have a great day, and I will see hopefully some of you at the closing bell and some of you on Monday. Have a great weekend, and thank you.